Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had key support at 66 to 68. That was the area we were using as the micro bull bear zone overnight, and buyers held ES above that zone and then pushed price back up towards yesterday's high, confirming just how resilient this market really is and putting buyers back in control short term. So at this point, heading into the open, we have pre-market support 71 to 73, followed by the micro bull bear zone at 66.5 to 68.5. Now buyers can maintain control above the micro bull bear zone, but ideally, if we're going to get a breakout to a new high today, then I'd like to see ES holding above 71 to 73. And we really should not get any deep retracement back down into the micro bull bear zone. So that's one idea to keep in mind. NASDAQ has already made a new high on the year in the overnight session. TF continues to be relatively weak to the other markets, but it tested some pretty strong support yesterday. So we could actually see some lift in TF as well, and we could see some upside movement in the Russell there. But as far as ES goes, as long as we hold above 71 to 73, the focus is going to be more on the long side, expecting a breakout to a new all-time high today. Volume is running pretty well, and we're seeing above average volume pretty much across the board. So if the buyers are going to push it higher, then this is their shot. We got pretty close to it yesterday. There was a big rejection, but buyers just rallied it back up, and it just shows you how resilient this market is, and that's why you do want to be cautious shorting a market like this. So above 71 to 73, we're not looking on the short side at all. The focus is going to be on the long side, anticipating a breakout to a new all-time high. And then above 78 quarter, there is no hard resistance, right? So we could quite easily go up to 83 quarter to 85 quarter and potentially even higher. It's really just going to depend on volatility and the type of volume we continue to see in this market. On the downside, if we get a failed breakout yet again, then we could actually revisit yesterday's lows. So on the downside, if we get a break below 66.5 to 68.5, even though we do have some minor support at 62 to 64, most likely if we break 66.5, we will probably go down towards 58 quarter, 60 quarter, and then if Russell is actually breaking below yesterday's low, then ES could even go lower and test the naked VPOC at 55.5 and the support zone at 51 to 53. That is the low odds scenario, given how strong the overnight session has been and given the big reversal off of yesterday's lows. But just something to keep in mind in the event that we do get a failed breakout and a pullback yet again. On the econ front, we have industrial production out at 8:15 a.m. Central Time. Yellen on deck again at 9 a.m. Central, and then Beige Book at 1 p.m. Central. So there are some economic catalysts that can still, create some volatility in this market. But, we want that 71 to 73 area to still hold despite the volatility. And even though we can get pullbacks and we can get some rotational activity, that 71 to 73 zone is pretty key at this point. And as long as we're holding above it, we can chop, we can kind of balance and set higher lows and higher highs. But as long as we hold above that zone, the focus will still be on the long side, anticipating a breakout. So those are the main thoughts heading into the open. Let's see how well the buy side holds up this morning and take it from there.